welcome. In a post-Trump world, what happens to the business process outsourcing or the business process management industry? That's the question I'm putting to Tyagarajan, Managing Director of GENPACT, one of the largest companies in the world in this space and perhaps the largest in India. Tiger, thank you very much for speaking with us. So let me ask you a direct question first, because there are fears and there are apprehensions. Is the BPO industry going to collapse because of Trump or the post-Trump world?
No, there's no such thing as collapse. I think it's one more change that the industry will have to deal with. But it's a layer of changes that has been happening to all industries, and therefore our industry is not immune to that. Actually, our industry has to change every time our client's industry changes. So I would say it's another dimension of change. And in some respects, actually, it's a change, and we can talk about it, that I think actually is good for the industry. Okay. I mean, this will be a surprise, but yeah.
Right. So, you know, what Trump says, and many of his followers, and I don't mean followers in America, but let's say people, other political leaders who follow his train of thinking might say is that we need to bring jobs back into our countries. It's not just about saying that let's block so many H-1B visas from being given and so on. So the proposition actually could be potentially much worse than what we thought.
So I would be, so obviously he's saying that. So there's a journey here, and one doesn't know in what form and fashion it will unfold. There's the manufacturing aspect of everything he's talking about, and then there is the services aspect. We are obviously in the services side of the house. I think there are many puts and takes here. I'll start with actually our clients. And irrespective of the industry, I think every client is looking at a slow growth world. I don't think that's changing.
And that was there in any case.
It was there in any case, so that's going to continue. Looking at a volatile, uncertain world, there's nothing that's fixed. If anything, that's increasing in volatility.
And that's because of consumer preferences?
All kinds of things. It's the cycles of change are faster. By definition, therefore, consumer cycles are faster, business cycles are faster. Technology is disrupting more rapidly than it used to. So therefore, there's no such thing as, you know, I have this customer forever, I have this platform forever. No, it's going to change. So you better be ready for change. The third is commodity prices, foreign exchange. In an interconnected world, the big difference is that when something used to happen in one part of the world, it would take its time to ripple through to other parts of the world. Now with instantaneous information flow, instantaneous way you can trade and you can hedge and you can buy future, but basically there's no such thing as any part of the world that's insulated. There's one way to insulate parts of the world, which is you completely put barriers, physical, trade, information, protection. You could insulate yourself. But there are problems with insulation, we all know that. So our view is that you're in a slow growth, highly volatile, even more uncertain and volatile world. And disruption is a given, driven by digital. You know, business models have to change, everything has to change. And now you have another variable, which is policy changes. Okay, so that's just one more variable. What that is doing is a lot of our clients in every industry are saying, we have to change even more. So if anything, it's actually a catalyst for change. Digital was a big catalyst for change for us. So you can say digital is a problem because it's actually going to disrupt the BPO industry. I would say yes, but it's also a catalyst for change. Even people who didn't want to change have to think about change. I would say the same thing about policy changes.
Right. So you said that jobs will actually go up. Not jobs, but you said that business would actually grow.
Business change would be driven faster and harder than before. That change creates opportunities. It obviously means some of the existing work will change and get destroyed, but that was going to happen and was happening with digital in any case. So it's a question of, can you navigate the different changes and complexities, and I would argue that those who have multiplicity of solutions and various options are the ones who are going to be the ones who are going to thrive in this world.
Right. So let's take one illustration. So I don't know, would banking be a good example?
You can take any industry.
Any of the
so I would actually first say that the industry doesn't make as much of a difference as the company in that industry. Each company in each industry behaves differently depending on their specific situation, their
where
culture,
they are on the digital,
where they are on their journey in digital, what kind of leaders they have, all kinds of things.
So I don't know, you'll have to pick one example.
Just pick any example.
Yeah. So if
a bank or an insurance company or a manufacturing company.
Or let's take a manufacturing company, maybe because they're more susceptible. So today, at this point of time, so let's say they are catering to a domestic market, which is the US, if they're in the US, and parts of, let's say, Europe, South America, Asia, and so on.
So they are a global business.
They are a global business today, right? One of the things that they have to think about now is bringing back manufacturing capacity to the US, because there's someone who's telling them to. Whether they do it or not is a different thing. So how does that affect? So maybe today part of their processes, which could be in, let's say, payroll, which could be in accounting, all of that is sitting with you, right? So how does this play out now?
Oh, that part is easy. Actually, that's the easiest part. If they decide, underline if, they decide to actually add another manufacturing plant to the US, and as a result, actually, let's say, reduce a manufacturing plant in Mexico. The fact is that when those jobs get created in the US, you still need a whole bunch of services around those jobs. And therefore, anyone who's a partner with that particular enterprise on those services will do more work for them that anyhow they were doing, but now that increases. The work for them that person was doing in Latin America will reduce.
Right, but you're assuming here that work, I mean, we're all talking hypothetically, that work will necessarily come to a company like GENPACT, because
if it's already in a relationship, and if you're doing X transactions, you just increase those transactions. So so that's why services is not that easy to put one's hands around. You can put your hand around a factory and around manufacturing. That's a very different discussion.
Yeah. So you're saying the reason why things will continue and become
in that particular example.
In that particular example, or if you were to extend that to, let's say, banking or insurance, is because the relationships are strong, the processes have been handed over to you many years ago, you have a better knowledge of those processes than they do, and therefore...
And it's just increase in volume.
Yeah.
So it's just volume increase. Right. Now you could actually take that discussion in a different direction, which is if actually there is no existing relationship, and the company is thinking about driving digital transformation, they had many options. So first of all, some companies haven't thought about these things in the past. Then they said, oh, I have to think about digital transformation because my board is asking about it, etc. So then they started getting on the journey of digital transformation. One of the tenets of digital transformation, in our opinion, is that you need to find a way to lean things out, standardize, consolidate, etc., before you can actually bring digital in, because otherwise digital is not going to work. So therefore, they would get onto a journey of, I want to find a way to consolidate, transform, and then bring in digital. And therefore, there would be a sequence they would go through. That sequence would involve a partnership with people like us, where we would then leverage our global delivery centers to actually deliver that consolidation, and then start undertaking the journey of digital. In some cases, in the case of some of these clients, they might actually say, why don't we consolidate that in actually a US footprint? Now, for us, the answer is perfectly fine, because we have 5,000 people in the US in 7 operating centers, and we serve about 100 clients from there. So we just add one more client to that. So what's the big deal? The value proposition for them changes. Their value proposition is no longer just benefit initially from labor cost. It has to come from productivity. It has to come from digital-driven productivity right up front. So therefore, the sequencing might be different. It'll be, can we apply digital first, consolidate and apply digital, so that instead of 300 people, we have 200 people doing this work.
Right. So
and then maybe a bunch of that gets done in our Pennsylvania center or in our Texas center.
Right. So you're saying that because you have onshore or on-site presence, that's going to put you at an advantage compared to others who may not?
Who doesn't? I mean, there are lots of people who do,
right,
but some of them don't.
Right. But if I go by your earlier argument, it really may not make a difference even if you didn't have much of a presence onshore, because that relationships and the nature of the sort of partnership was such that it would have come to you in any case.
And the nature of the work.
Yeah.
More than the partnership, it's the work. So if it's
just work leading to partnership.
If it's increasing just volume of transactions, I was giving you 100, now I'm going to give you 130. Then it's just increasing the volume. So that's an easy one.
Right.
Then you have, I want to change the sequence to transform first, then I will have a partner run it. It could change the way that sequence is done when it's run, which is I don't want to run it with delivery from these 3 places. I want to do it from this place and those 2 places. So you change the shape of that footprint of delivery.
Right. So going forward, I mean, a lot of your business is getting complicated. I mean, you're working on artificial intelligence services and so on. Now, how do you see that affecting, if at all, the landscape or the landscape of talent, the landscape of hiring? Is that going to change fundamentally? I mean, now lesser number of people, more value?
No, that has been a journey actually for us for 11 years. If you look at our graph of revenue per head count, it's been 11 continuous years of increase. And that's been driven by basically 3 things. the easier work was always getting automated. Actually, no. The easier work first was getting leaned out and use of Six Sigma to actually reduce the number of people doing stuff. Then it started getting automated, and now it's getting even further disrupted by digital. So that means the easy work reduces and the more complex work increases. The second is that things like analytics and digital type of work require higher level skills, therefore higher price, higher cost, everything is higher. And the third is, as you have global delivery footprints, today about 60% of our overall headcount is in India. 10 years back, that was 80%.
That's 70,000, 60% of 70,000? Okay.
Yeah. 65% of 75,000, 78,000 is in India. At some point in time, when we started this journey in 2005, 2006, an independent company, that was 80-20, actually 85-15. So today we have 5,000 people delivering services in the US. When we spun off in 2005, we had about 200 people. Significant change. Eastern Europe used to be 400, 500 people. Now it's 5,000 people. So as that changed, the cost per person ratio also changed. And then finally, we have a lot more consulting and design and re-engineering type work that actually our people do. 20% of our business is transformational services, growing at 20% plus. So by definition, when those parts of the business grow faster than the base of your business,
so what's
the
the
revenue per
illustration
headcount?
of transformational
So we don't look at, for example, headcount addition in any given year and plan for it at all. I know that's different from a lot of our competitors in the IT space. We actually have never given guidance and views about our hiring. I mean, I actually have said before, I wish I could grow revenue by 30% with no one to hire. I mean, that's the best position to be in.
Right. So when you say transformational services, can you illustrate that?
So,
one example.
So let's take a client in the insurance space who says, I have 2,000 people who do property and casualty insurance work, or let's say auto insurance work. I want to completely change the way they do work. I want to standardize it, simplify it, and then I want to bring digital tools in. Those digital tools will be 5 different technologies: robotic automation. I want to use artificial intelligence, machine learning. I want to make it more visually obvious to people real time. And I actually want to take it out into the field where if you have an accident, then I have the ability in about 30 minutes on the spot to give you an answer as to how much claim I can reimburse you, which means I need mobile enabled platforms to reach to the person.
Is this happening somewhere?
Oh, experiments are going on. We are doing experiments. Our clients are doing experiments, big time experiments. So all of that requires design thinking workshops, requires complete redesign of processes, end-to-end processes, and a bunch of those things that are classic consulting engagements. And we call it transformational because it changes the way business gets done. And then subsequently, you get to a point where you say, okay, now who do you want to run this thing? Often the client says, okay, why don't you run it for me? Sometimes the client might say, I'll run it, but 80% of the time they actually move the running to us. So it starts with transformational type, consulting type engagements and ends up with I'll run it for you. Yeah. So it might take a year for us to get to running it, sometimes 2 years, but a high probability that actually will end up running things once you get into a actual consulting engagement.
Right. So I mean, from an India talent point of view, so how much of your talent pool today is equipped to take on these transformational services, as you call them?
So the reality is that, I mean, you can always hire people who are equipped, but that's not the long-term sustainable institution building model. We come from a school of thought that teaching and training people on a journey where actually they become better and cleverer at doing these types of things is the way you build institutions. So we've been training a whole bunch of people on digital tools. We've been training a whole bunch of people on specific domains, on claims, for example, or on commercial lending, or on supply chain for a consumer products company when it is getting an order from a retailer, and then let's say you make shampoos, and then you're going to figure out a way of filling up the truck, finding which warehouse it has to go from, and then delivering it, billing it, and then collecting the money. That whole cycle requires a lot of information flow. That's what it is. It's no different than a classic information flow in any industry. And a lot of that is getting digitized.
And this has fundamentally changed from the past when a BPO industry would be exposed to one piece and only that piece and not really.
So we've been on a journey of end-to-end for about 9-10 years now. Our belief has always been that biggest value gets created when you attack something end-to-end. Then we went down this path of creating IP around what we call smart enterprise process, where we picked 55 odd processes and then defined the taxonomy, the metrics, etc., to drive those end-to-end process outcome improvements. We've always said that efficiency is important, but effectiveness and outcomes is much more important. So think about a company that actually says, I spend $300 million on managing insurance claims, but the total claims I settle is $5 billion of claims. If I can find a way to reduce fraud in claims by 10%, I would save $30 million. If my $300 million becomes $280 million, that's $20 million. Here I can save $30 million. So the magnitude of difference you can make in effectiveness is massive. So we always believed in effectiveness. Digital is turbocharging effectiveness, where you can actually drive dramatic improvements in outcomes. And that includes outcomes on growth, which is the other pivot that I think the industry is going on. So about 40% of what we do is actually helping clients grow faster. If for example, I'm lending, and I'm in the small medium business lending market or leasing market, which we know really well. If it takes you 5 days to say yes or no to a customer, and your market share is 10%, if tomorrow you find a way of giving an answer in 30 minutes, guaranteed your market share is going to double. In that situation, the chances are you can charge a little higher interest rate. Yeah. In that situation, the chances are that I'm going to get the best customer from a credit profile perspective, because the worst customer is one that no one else has lent to and is going to be at the end. And therefore, even if you take 20 days, you'll still get that customer. So if you all of a sudden say, I'm going to grow faster at a better margin at a lower loss, you're talking about a business that could actually triple profits just by implementing this one change of, instead of a 5-day approval, I'm going to find a way to approve in 30 minutes.
Right. And many banks are working on stuff like that,
exactly
including
that.
in India.
Yeah.
I mean, not the banks themselves, but the people who are working at the layer below.
Yeah.
Right.
Absolutely.
We're running out of time, Tiger. So let me ask you one sort of concluding question. What are the 2 or 3 things that you're watching most in the 2017-18 period? It could be both a combination of concerns as well as, let's say, a windows of opportunity.
2 or 3 things to look for. I would say being very close to clients has always been my philosophy of understanding what's happening in the marketplace. The big belief I've always had is you need, in today's world, probably true today, I actually talked about it 10 years back, but it's probably even more true today. Don't try and predict the future, because I don't know. I think there are 2 things that are real. It is going to be very different tomorrow than today, and the chances are it's going to be more different than you can imagine. And the chances are it's going to happen in 2 years instead of 4 years. So therefore, you got to be really agile as an organization, which means you got to thrive on change. So how do you build an organization culture that thrives on change, that actually says, what was successful until yesterday, I'm going to throw it into the dustbin, and I'm going to do something new today. So you really need a leadership team that is going to challenge yesterday dramatically. And that requires refreshing leadership and agility. And the second is, you need to be in the market, and leaders have to be in the market to pick up signals so that they identify changes a minute before other people identify it, and a minute before the customer needs it. So then you can signal that back, change the organization, go back to the customer and provide that. So we've always thought about our leadership team being distributed in the marketplace so they can pick up the signals, which means you got to spend a lot of time with clients. And you got to really...
And you have no headquarters.
We have no headquarters for that reason, because our clients are all over, so we have to be all over. And then you need an agile organization in all parts of the world that actually can move fast and don't worry about internal bureaucracy. So I worry about, as someone becomes bigger and bigger, how do you prevent bureaucracy and agility from becoming slower? And the second thing I worry about is, how do you actually make an organization understand that what has been successful until this morning is something that is worth thrashing? That's a tough one, but it's, I think, worthy of fighting, because it's so tough that very few people will be able to cross the bridge.
And that's the GE thinking, I guess.
It is a little bit of the GE thinking, which is still continuing. But I think it's more relevant in this industry today than ever before. And I think, unfortunately, like in every industry, I would argue more than 50% will not be able to cross the bridge. I hope we are, but...
Tiger, we've run out of time. Thank you so much for speaking with us.
Thank you.
Thank you.
Thank you.